and Economy. With me in the studio are my colleagues Karthik Malhotra and Amit Ranjan. Good morning, gentlemen.
Morning.
We will begin the show, of course, with the markets. Markets are currently range-bound, closed on a flattish note yesterday. Are they paring their gains over the last 2 weeks?
Markets, you're right, Shweta. Markets have been range-bound, and Indian indices, of course, have touched their thresholds and breached them of 19,000 on Nifty and 65,000 on Sensex, and it's holding its ground fairly firm. Despite the monsoon, I think the ground for the markets is fairly firm as we speak. Right now, 10 a.m. On 11th of July, Sensex is up about 0.5% or so, 350 points, 65,752 on the Sensex. Nifty is at about 0.6% gain, 124 points up, breached the 19,450 mark, right now trading at 19,480. And it's an interesting day to look out for markets in general because look at the news that's coming in. Yesterday, Reliance Industries breached the market cap of 18 lakh crore rupees. And no surprise, it is one of the most traded stocks this morning right now. You also have action on Tata Motors. This, I think, comes again on the back of announcements made by Hyundai yesterday. Hyundai, of course, is not listed on the Indian bourses, but Hyundai and Maruti claiming its leadership in the 10 to 20 lakh rupees segment. Hyundai announcing its first compact SUV in the sub 10 lakh rupee range. So overall, everything auguring well for the auto sector. So Tata Motors is one stock which is in action right now. HDFC Bank is also high on the trading radar of a lot of investors. As we know, HDFC and HDFC Bank merger is going to be listed as HDFC Bank on the 13th of July. So 2 days for that, there is some action buying happening on HDFC Bank. And then, of course, macro numbers adding up well. The government late last night, in fact, the Income Tax Department announced that almost a 16% increase in taxes collected so far, direct tax collection this year, standing at about 4.75 lakh crore rupees. So macro indicators also auguring well, and markets are expected to be range bound, if not maybe a couple of 100 points up from where we see them right now.
All right, so it's looking well. Market in the green.
Nothing to complain about at all.
And it's in the green at this point in time. We will, of course, bring you all the updates from the market close. But another stock to look out for would be Adani. Adani case will be heard in Supreme Court today. And what we're given to understand, SEBI had filed a petition in front of the Supreme Court yesterday asking for a direction as to where the investigation into the matter of Adani stocks be headed. And that is a very important listing in the Supreme Court today. Supreme Court, of course, is expected to give some direction to the agency.
That's right, Shweta. Specifically on the stock, this news came at about 2 p.m. yesterday on 10th of July, and there wasn't much movement in the Adani Enterprises stock. And I kept tracking it till markets closed at about 3:30. There wasn't any movement, neither is there much movement on the markets today. In fact, let's pull up Adani Enterprises and see where the stock is trading this morning. Incidentally, the stock is up pretty much in line with Sensex and Nifty, up about 0.6% or so. So markets are not reacting to that news of the Supreme Court hearing today. Now remember, this Supreme Court hearing is not specifically on the matters pertaining to Adani's specific role in short selling as a concept and as an allegation by Hindenburg Research. Rather, this is more about SEBI really trying to tell Supreme Court that the expert panel commissioned by Supreme Court to look into the matters pertaining to SEBI's regulatory failure, and that panel coming out with this report in the month of May, that perhaps the rule change of 2019 made it difficult for SEBI to break through the opaque structures of the 13 companies that seem to have allegedly benefited from the short selling at as claimed by Hindenburg Research. Now, SEBI's quarrel with that report is up for hearing in Supreme Court today, where SEBI is pretty much saying that that those 2019 change of rules have not made life more difficult. In fact, life would have been almost as difficult even prior to 2019 in identifying the eventual beneficiaries, the eventual owners, the last faces of those 13 companies that allegedly engaged in short selling at Adani. So the matter is more about SEBI not agreeing with the reporting, with the report of the committee appointed by the Supreme Court, and largely seeking guidance from the Supreme Court on how it should further proceed with its investigations. Now, of course, SEBI is expected to submit its report on the 14th of August, and today's hearing is an interim hearing leading up to perhaps progress thus far on the 14th August deadline. But this hearing has got little to do, from my understanding, with the short selling allegations at Adani Enterprises, and more as not agreeing with the recommendations of the expert committee formed by the Supreme Court to look into regulatory failures, and the specific point that the expert panel had suggested of the rule change of 2019, making it more difficult for SEBI to eventually try and investigate and reach to that last beneficiary, the last owner in the case of those 13 opaque structured companies.
And that in fact was one of the concerns that SEBI had raised. There were recommendations with respect to enforcement policy, judicial discipline, robust settlement, and SEBI in fact in its response yesterday, even in the court, has clarified that everything has been taken care of and we are moving with the due judicial process. We will of course submit the report on time. So
that's
today's
the
hearing,
affidavit you're
and the affidavit,
to, not the hearing. The hearing
exactly.
Is
The hearing is expected to be today, but the affidavit that they submitted has made it clear that SEBI is doing what it can. The mandate, of course, is to look into the allegations of short selling. But the petitioner and the affidavit that was filed by the petitioner made something very clear, and I think we reiterated it yesterday on the show. We're going to reiterate it again, and that is there is no clean sheet to Adani just as yet. Things will be made clear in the month of August when SEBI finally comes up with its report. But today's hearing essentially will give some sort of guidance to SEBI as to whether it should be investigating the 13 opaque structures that we are talking about.
So I think the mandate is clear that the remit of SEBI is to go ahead and investigate those 13 companies, and that is what this case is all about, Shweta. This case is really about trying to understand that was Adani Enterprises or any other companies related to Adani Enterprises directly funded by Adani Group, not just Adani Enterprises as a company, but Adani Group as a whole, and its leader Gautam Adani, friends and relatives of Gautam Adani. Basically, the case is around trying to understand, did Adani Group or any of its promoters get benefited through short selling, right? And I think the mandate has been fairly clear on SEBI to go ahead and find out who those 13 companies, the foreign investors in the short selling, alleged short selling, are, and who the eventual beneficiaries are. And that remit is fairly clear, and SEBI is mandated to go ahead and investigate and try to arrive at who the eventual owners of those companies are, those 13 companies that allegedly did engage in short selling and wrongfully made gains on their investments on Adani. Now, so I think what SEBI really wants clarity on today is dismissing the recommendation of the expert committee, which said that the rule change of 2019, which was incidentally instigated by SEBI itself, the rule change of 2019 has not made it difficult for SEBI to investigate these 13 companies and the owners of these 13 companies. Rather, try and seek guidance from SEBI on how it should now go ahead and conduct those investigations and those exercises. And my understanding, and this is something that even Mr. Sriram Subramanian, the chairperson of InGovern, yesterday on our show came and said, that perhaps we cannot rule out at this stage SEBI seeking some intervention in terms of intergovernmental departments as well as multinational agencies to come on board and help this investigation go further. So that seems to be the larger context of today's hearing. Now, of course, Vishal Tiwari, Advocate Vishal Tiwari, in his affidavit filed to the Supreme Court yesterday, also pretty much reiterated something that you and I have been saying pretty much, right from the start of the Hindenburg report on Adani, that and the subsequent expert committee report that came out in May, that nowhere in that report has Adani been given a clean chit. And this is something that was widely reported in national media across the board. In fact, even if you do a Google search today, you will discover any finding, any reports filed on the findings of the expert committee and its recommendation doesn't mention, clean chit, but that had been widely reported. So I think it is very simple to say that the expert panel never gave Adani a clean chit. The expert panel never even gave SEBI a clean chit on regulatory failure. And as things stand today, I think SEBI wants to seek further guidance from the Honorable Supreme Court to understand how it should go ahead and investigate the matter further. Right. But of course, we will get some minutes of that hearing today, and then hopefully we should be able to continue our reportage.
And before we move on, Amit, you've worked on a timeline in Adani case. If you could quickly, for the benefit of our viewers, run us through the timeline in the Adani matter.
It's quite an esoteric one over here, but yeah, the simple thing is, before 2019, if you are a foreign portfolio investor, in case of foreign portfolio investors, the beneficiary ownership was mandatory to be revealed only if it was above 25%. And this is the little I understand. Karthik will help me on this. After 2019, it came down to if it crosses the threshold of 10%, it is mandatory. Before 2019, only if SEBI asks you for your ownership details were you mandated to give it, otherwise not, reveal it, otherwise not, if you are under 25% in case of foreign portfolio investors, your beneficiary ownership. After 2019, they got it down to 10%. So those were the little opaque structures. With respect to companies, the threshold was brought to 25%, and with respect to trusts, 15%, FPIs, 10%. So that was basically the difference in timelines or the opaque structures that Karthik is talking about. It's a 46-page response that has been filed by by SEBI. So it's quite a tortuous one, to say the least. But yeah, beyond that, I think Karthik has already elaborated on what exactly are the modalities that are in the case.
Right, and there'll be more clarity, of course,
so
later in the day today.
So I think the question is not as much about who the owners of those FPIs are, but rather who is eventually funding those FPIs, and the profits that the FPIs make, who are those profits being returned to?
Are the Adani companies breaching the public shareholding? Exactly. So all of that, of course, will be made clear later in the year. As a matter of fact, in August, when SEBI comes out with its report. But SEBI, of course, asking for guidance from Supreme Court in which direction should its investigation be headed thereafter. It's an important session in the court today. We will, of course, keep bringing you details of that very important session as and when it happens. But shifting focus now to another important story that we're tracking, and that is the joint partnership between Foxconn and Vedanta. It appears that Foxconn, Karthik, has now pulled out. Does this mean that India's semiconductor mission plan takes a jolt? Or is it?
Not really. I think Minister Ashwini Vaishnav has very clearly stated on record, and in fact his quote has been carried in most papers today, that it does not dent India's semiconductor vision for semiconductors and semiconductor fabs to be made in India. So I think it perhaps could be seen as a jolt to Foxconn itself wanting to invest more in India and conduct more semiconductor operations, manufacturing in India. But even that I would take with a pinch of salt, simply because it was a joint venture, and the two players in that joint venture, which is Taiwanese company Foxconn and Indian company Vedanta, just deciding to end that joint venture with Vedanta buying the investment of Foxconn and continuing with its own plans of manufacturing semiconductor fabs in Gujarat. I think the only change has been that there were 28 nanometer fabs, which apparently are far more complex to manufacture, far more complex to produce. I think that plan has now been revised to 40 nanometers. So from 28 nm, it has moved to 40 nm, and that should perhaps be easier for Vedanta to manufacture on its own. Remember, both Foxconn and Vedanta still needed a right technology mix, a right technology player to partner with them for that joint venture to produce the 28 nm fabs. Now, those 28 nm fabs don't seem to be on the immediate drawing board, and with that progressing to 40 nm, Vedanta seems to be fairly confident that it does not need a partner like Foxconn to make those 40 nm fabs. Now, Foxconn on its own accord continues to be invested in India, and it is one of the few companies that does manufacture even Apple products in India. So as far as even investments in Indian manufacturing go, I think Foxconn is well invested. Vedanta, as we very well know, is a company which engages in natural resources and mining of natural resources. So when you talk about the whole value chain, the whole supply chain of raw materials, eventually value addition on those raw materials and making something tangible like semiconductors in this case, and not just semiconductors, even panels, even end panels that go on electronics, right? Something similar to, if I'm not mistaken, Amit, what Applied Materials wants to make in India.
Flat display.
Flat displays, right? So I think it is pretty much confident that even without Foxconn, Vedanta will be able to go ahead with its semiconductor manufacturing of fabs in India, and yeah, it seems to be still very well invested in going ahead and making those fabs.
Right.
So
I
overall,
think the
it doesn't
only
dent
hindrance perhaps would be technology, because which is where the application
but remember,
has
for
been
the
lagging.
28 nm fabs, they still wanted a third technology partner.
Correct, right.
So I think nothing stops
With
Vedanta
Foxconn being
from
pulled out, would that be? It would be difficult for them to fetch a partner
apparently
for technology.
not. I don't think they have split on lack of technology available internally. They've split basically on their respective visions on how to go ahead with this final output of manufacturing semiconductors. It's been more of a strategic disagreement rather than technology, because remember, even when the JV was on, there still was need for a third technology player to come in. So nothing stops Vedanta now from independently going and acquiring that technology, or forming another partnership for a technology transfer or a purchase of technology when it comes to manufacturing semiconductor fabs in India. So overall, I think the semiconductor story can still not be written off from what I read, and I think Minister Ashwini Vaishnav is fairly confident that that the 76,000 crore rupee outlay on semiconductors is yet up for grabs, and it should attract more investments. Remember, Micron was one of the semiconductor manufacturers which did agree to come and manufacture in India. In fact, that MOU also got signed when Prime Minister Modi was in the US. So overall, I see India and Gujarat particularly as a state encouraging some semiconductor production. But of course, this is a long drawn process, and it's not that you sign an MOU today or you sign up for a joint venture today, or you even invest and seek that investment subsidy from the government and set up plans for manufacturing. It's not that you will start seeing output in a couple of weeks or months. This is a long drawn process. It is a new sector for India to get into, and I think it's a little early to ring any alarm bells that this joint venture falling apart is going to dent India's semiconductor dream. I doubt we can write it off yet.
It's interesting though, both the Minister for IT and MOS had to come on record to suggest that this is not going to dent India's semiconductor mission plan, the dreams that India has. But we're going to move on now to stories that we're tracking from this airspace, which is airlines specifically, and Go First in this case. There's an update. It appears that Go First is up for grabs. Amit, there was this advertisement in Economic Times yesterday that we got hold of, and the advertisement clearly says that it's an expression of interest. The resolution professional is asking anybody who's looking at the advertisement whether they would like to buy Go First. At the same time, we're also hearing of Go First's revival, Go First coming back and flying back on skies. Which of this is true? I mean, this seems to be, two very contradictory positions.
All sorts of things, and there was also suggestions in that in the reports that we are seeing that the Wadias probably want to increase their stake in Go First. And now there is the report by DGCA that the maintenance of Go First air fleet rests only with the airline and not with the lessors. So it's basically the ball again in the court of Go First totally. I believe the revival will still go out as planned, and the flights will take off. But Go First is one part of it. The other airline, that is Spice, says they are committed to maintaining coming to an amicable settlement with the Sun Group. The Sun Group says there is no question of an amicable settlement with SpiceJet. And then again, the case with Jet Airways is again with the lenders. The lenders are saying it is high time that Jet Airways begins its winding up project. Karthik?
Karthik, this is a
I
never-ending story.
think the airline aviation sector is pretty much up in the air, except that it's grounded. So, okay, so how do I see it? See,
You know, it's a tragedy. I mean, although we are laughing here, but understandably so, we're laughing at the tragedy of it. The
the dark comedy or tragedy as you define it.
Because
So, I'll tell you how I see it, Shweta. I think the resolution professional, Shalinder Ajmera, is duty-bound right now as a professional RP to open up all potential options for the investors of Go First, which in this group, in this case, is the Wadia Group, right? And at the same time, the RP has responsibility towards the lenders and the lessors. So, as part of his duty itself and the duty of the office of the resolution professional, I think all options have to be explored. It's not that an EOI has been raised or an expression of interest has been raised suggests that Go First will eventually be sold. I think you just need to ensure from all sides that whatever you are serving as your duty to the airline, to the investors of the airline, and to the lenders and the lessors, you explore all options objectively, evenly, squarely, without prejudice, without bias, and in the best interest of the shareholders. So the ad that we saw in ET yesterday is pretty much one of those boxes ticked that, yeah, we have sought an expression of interest. Let's see what are the kind of interest we are able to garner, what queries do we generate from the market.
I have to ask, what if there is an interested party? What happens thereafter? And the proposition that the interested party makes is of beneficiary or is beneficial to Go First.
So
in which case, are we looking at a sale?
I think, again, it is early days to speculate or predict a potential sale. I think what we can predict, hopefully with some degree of confidence right now, is fair assessment of any expression of interest. Which means if there is, an unrelated party which wants to write off or take the 6,500 crore rupees of loan that Go First has on its book and wants to absorb that loan to begin with, number one. And then the investments made by the Wadia Group into the airline, right? Plus the operations and maintenance and the issues pertaining to the engines, pertaining to lessors, Pratt & Whitney engines, all of that. If there is somebody who is interested in putting up an offer to take on all those liabilities and take on those losses and take that loan and go ahead and yet express an interest which is beneficial to the Wadia Group, beneficial to the lessors, beneficial to the lenders, I think one can say that the resolution professional and the board of Go First is going to evaluate it earnestly. But the point is that a likelihood right now, given what is happening in the aviation space in India? And Amit just spoke about SpiceJet and Jet Airways as well. The chances are slim that a very sound proposal is going to land up on the desk of the RP by way of this EOI. But I think as part of his duty, the RP it would be considered, and then I think the Wadia Group could perhaps match that offer or better that offer in the larger interest of the airline. Now, what is happening? Gates of hangars of of airports where the Go First flights are there for the lessors to come and that's not going to happen, and let's stick to what NCLT had said, that we continue to hold possession of our aircraft completely, because I think the fear is that some serviceable parts from one aircraft will be put into the faulty aircraft and some parts are going to get replaced, and eventually they will not have control even over those 26 or 28 serviceable aircraft that it has. So that is the second issue which is in the Go First table right now. Then of course SpiceJet and KAL Airlines owned by Sun Group, Mr. Maran, saying that, again, a clash of opinion, that SpiceJet is hoping for an amicable settlement, but Sun Group saying that nothing doing, pay us in full. And at the same time, the committee of creditors at Jet Airways saying that, once and for all, just wind up operations and kill Jet Airways. So nothing really seems to be adding up.
In case of SpiceJet, of course, SpiceJet would want an amicable solution, and the Maran Group would not, because SpiceJet has been directed to pay up 380 crores.
Right.
That's quite an amount. 400 crores was all Go First was looking at for a revival. So
right, but
Absolutely.
Go First loan again tantamounts to 6,500
Yes.
crores. So, overall, I think,
Market
this
share.
year, and that is the fourth news coming from the aviation scale-up operation. So,
Some sort of consolidation that we are seeing. Prospects of all three airlines continue to dwindle, so to say. The updates from this space, but another sector that is buzzing, and that is e-commerce. Amit, what we given to understand that e-commerce sector is doing well. The second quarter for e-commerce companies has done well, mainly on the back of premium products. So your from people
Gadgets,
and
technology.
gadgets and technology. So
iPhones.
participation in the retail.
again, lots of numbers to start with. So 24% jump in Q2. It was only 16% in Q1. So, and that has been on products. Premium smartphones sales on e-commerce through e-commerce sites has jumped 50%. Health and pharma products in the premium 24%. So these are the ones that have been basically driving this jump of 24% in this quarter. E-commerce sites basically saw a big jump in their sales and value during the pandemic, but I believe they are coming back.
Right.
At least.
And offers,
Maybe.
and on the back of the fact that it's easy for people to now avail loan facilities. Sell a premium product without asking the buyer to pay upfront. So credit card usage from, buy now, pay later, all those, of course, important schemes that are being put to use.
In the larger context of the Indian economy, right? We have reported that the economy has grown better than expected, right? There were, of course, can't sort of disassociate with other numbers that we are seeing in the market, right? I remember, right? So that is going to be what, 60-65% of the country is going to squarely be in the middle class, which means the poverty alleviation has begun to happen. Of course, it's a long process. Now, juxtapose this with housing sales. We've seen cities to purchase property, but we've seen a rapid rise in some form or another, if not work from home, at least flexi home continuing, except for the media in many other sectors. And overall, you're seeing that this pent-up demand is getting people to spend more. This is today than what they were 12 months ago, right? Or 2 years ago or 3 years ago. Months of this calendar year, between Jan to end June, 30th June, 2 million is a big number. And now look at the breakup, 46% of those are SUVs. The 10 to 20 lakh rupees segment, which was earlier known as a small hatchback car maker, Maruti, the numbers there. So overall consumption story, when you look at a rising middle class, when you look at more number of overall, the demand, pent-up demand for housing, for autos, and expensive autos at that surging, need to sort of scale up in life is all augmenting well for the overall India growth story. And of course, with this newfound freedom, with this possibility of, of being more assured of your income status and wanting to spend money, I think it's all auguring very well for the e-commerce space. Now, of course, like you mentioned, so overall, yeah, there is buoyancy, and I think that's all good for consumption, which sector when it comes to delivery, logistics, all of that. I think we are in an okay position, especially
With respect to fashion and eyewear, we were more prone to is changing, and that is one thing that I've noticed. And as far as this continuing, it was 16% growth in the first quarter, 24%
days or something, they call it big sale or whatever. Flipkart is going to August, Independence Day, there are sales again.
Multiple sales in
So,
August,
I think the whole sales
festive sales that will drive up profits for e-commerce
Shweta, which is emerging squarely from all of this is that the existing one thing is very sure, and this is a trend post-COVID, that everybody you live only once, you only live once, YOLO, right? YOLO, FOMO, sales in home sales, etc. But even travel. Look at overall, I think India has now come to realize, the Indian middle class specific, till as long as you can afford it, because God knows what happens.
And as we had discussed yesterday, the hotel prices were up, the airline prices are up, but the bookings have also gone up despite these surges. So the YOLO is very much there. World Cup comes after 4 years. We haven't won anything since 2013. Probably see a big jump, not just a jump, in the next half of the year.
Absolutely. So it's a story of India's continue to hamper sentiments across India. What's happening in Delhi NCR, and we discussed the Gurgaon story yesterday, because it's important to note that this is a, it's good to have a hearty laugh. It also reflects very India, and these are rains just ahead of time. Many would say this is not monsoon, this is
unfortunately, I'm not surprised. It's not something we haven't seen before. Of course, we haven't seen this torrential rain ever. Report suggests that since the 1980s, I think 83, 84, Delhi NCR has not seen rains of this magnitude. Being created due to poor infrastructure in the satellite city of Gurugram. Even a few showers every now and then would result in traffic jam. Queues and queues of jam. But what we are seeing this year, of course, is absolutely horrid. This time around specifically is these are the memes, right? These are the memes that are doing the Yog Vihar Lake for the people whose cars are floating away, and I wonder how much insurance they will be able to seek for cars drifting away rather than meeting with accidents as they are more commonly defined. But I think what is worrisome this time around is Yamuna breaching Yamuna in sector 125 Noida, and it is visible if you were to go up to the terrace. Up until now, Noida was able to hold its own and hold it pretty well. Continues to flow into the Ganga and the tributaries of Yamuna. Remember, Haridwar was flooded yesterday, right? I've been told Roorkee has received floods. So these are on the foothills of Uttarakhand's also begins to cripple, and let's just hope these rains do subside banks of the Yamuna, as it has not the banks of rivers but poor infrastructure has in the case of Gurugram and Delhi.
I mean, Karthik, and we discussed this. This is climate crisis at its best. We've seen signs of climate crisis. Perhaps it's about time that we build infrastructure that is as resistant as is in case of earthquakes, for example.
Yeah, and unfortunately, people builders did not take, and civic authorities did not take enough message from the alarm bells around climate change, which have been ringing for a while. It's been decades that we've been talking about, about climate change, about global warming. Infra companies have not really taken very serious cognizance of these alarm bells, and this is a situation we damaged already, being rebuilt. And will companies really go ahead and invest in these bells and whistles available with the same government departments who will be eventually given highways? Mr. Nitin Gadkari has to himself get involved in. And beyond a point, I think a lot of emphasis from center rather than leaving this tendering process only to the state.
So much as take care of the national highways. The state infrastructure still belongs to state authorities, civic authorities, which is where they need to come in. And about loss of work, they talked about employees and their concerns. So all in all, there's lose net.
Correct. So yesterday, in fact, we did talk about this as well. I'm not talking just about meetings, connecting on a Zoom call, infrastructure to support commute from point A to point B. So businesses, of course,
that we're tracking amid rainfall. We don't know if people are ordering more from those like Dunzo or Blinkit. What we are given to understand, Dunzo is looking at cutting cost. My young colleague Udisha joining us. Udisha, what's happening at Dunzo? I suppose they are letting go of 25% of their workforce.
Right. So as far as the recent coverage is concerned, so Dunzo, the hyper local delivery, goods delivery applications, number of employees that we are talking about would be somewhere around 500. So at present, as far as my understanding goes, the number of employees Dunzo has currently is 1000. So if they have not credited 50% of the salaries of the 500 employees, it's a big thing. Plus, it is also looking at cutting the cost, because there is news that Dunzo might come up with its IPO, initial public offering, in 2025. So there is a pressure also from the investors that the management turns profitable before that period of time. So there is no clear indication in terms of what exact number would be there if there is going to be a job cut. But since the company is in the process of optimizing, cost optimization, there is a possibility, and reports are saying that there could be job loss. But the June salary, the 50
your retail items, your quick 9-minute delivery, which is when you don't have a spice, they bring you home that spice, be it rain, be it
with a salary of 75,000 rupees a month or more, their salaries have been delayed. So, I would...
not the delivery
Not the
persons.
delivery. The delivery agents, in any case, from my understanding, would be contracted for, right? And there would be payment, some fixed component and some payment per delivery, right? So, to my best understanding, their wages have not been compromised on. And the step taken by Dunzo is for senior manager and above employees with a salary threshold of 75,000 rupees per month and more. In their case, 50% has been credited already, and the company has promised that the balance 50% will be credited before the 25th of July.
Okay.
So, as I'm reading this, there is a cash crunch in Dunzo. There is perhaps, this need right now to strap in as much cash as they can, collect more income during the month, and then credit the salaries back. Unfair, of course, it is, no matter whether, we're talking about the delivery boys or the senior managers or above. It is definitely sad and unfair, but I think it is also some sort of a correction being done at Dunzo, that it does not want to perhaps burn more money of its investors. And Odisha, correct me if I'm wrong, I think Google and Reliance Retail are the two major investors in Dunzo. So it doesn't seem to be as much about a case of burning investors' cash to pay salaries, but to me it seems like making enough cash from operations to be able to afford salaries, and then of course going forward in time, some sort of rationalization measures cannot be discarded right now, that it may want to look at trimming its workforce and making sure that cash from operations is able to sustain the business rather than cash coming in through way of investments.
All right. So, of course, cash is needed, and appears that Dunzo does not have enough of it. It's interesting to point out, Dunzo was a late entrant in Delhi. It was an early entrant in Bangalore, which is where it was extremely famous. I remember coming to Delhi, nobody knew what Dunzo is. Dunzo has just made an entry. It does not appear that it's been profitable for Dunzo to come into the northern market, Karthik.
I don't know, Shweta. I haven't seen. It's an unlisted company, and what gets reported usually is not profits but valuation in the case of startups. So I don't know specifically about profitability, but when you talk about competition, you know for a fact that Zomato-owned Blinkit is not profitable.
Not profitable,
right?
Absolutely.
But on the contrary, Swiggy-owned Instamart is on the verge of breaking even on cash from operations, right? So overall, I think the quick commerce market is something that has become fairly essential to the way we buy, the way we consume, especially in metro cities, and is not something that you would write off immediately as a not profit-making business. I think people still see a lot of potential for these businesses to scale up and add value back to the investors, and as a result of which, and this overall change that they've been able to influence in consumer behavior, I think all these companies are here to stay, the quick commerce companies. Now, of course, it's a matter of time before some of them would possibly consolidate, some of them would make profit, some of them would offset more of their stake and raise more capital, and some of them may not eventually see through the next 2 years, 3 years, 5 years.
Absolutely.
Right. So, but I think e-commerce, quick commerce as a segment of e-commerce is here to stay, and let's see which are the winners in that market.
And not just commerce in general, quick commerce and e-commerce companies, as they reported, profits surging as much as 24% in the second quarter. We will, of course, keep tracking all those details. Udisha, Karthik, thanks very much for joining with your inputs on that story. We're going to leave you with visuals of the brand new launch from Hyundai, the Exter, which is a sub 10 lakh rupees category. Visuals, of course, are going to be played up on your screens very, very shortly. The Exter was launched yesterday with much fanfare, Karthik, and it appears that there is a huge market that they are looking at. They're, of course, very, very optimistic about their brand new launch. But we're going to end this bulletin with that. Thanks very much for watching.
If you see Indian market, and especially every if you see in May and June it was the number 1. So I think जो एक आइकॉनिक ब्रांड होता है वो कस्टमर्स उसके हमेशा वहाँ पर रहते हैं. अच्छा कंपटीशन का मतलब है कि कस्टमर के लिए और चॉइस है, जो कि बहुत अच्छी बात है. मगर एक बेंचमार्क प्रोडक्ट जो होता है वो हमेशा उसका कंपटीशन अपने से होता है. हमने हमेशा ये माना है और आज हमें मानते हैं टुडे दैट एक्स्ट्रा इज गोइंग टू बिकम अनदर बेंचमार्क. फ्रैंकली स्पीकिंग, इंडियन मार्केट इज वेरी बिग. यस, SUVs आर very strong, and today if you see Hyundai contribution to SUVs is about 54%, 55%. With Exter probably will reach 60%. At the same time, you saw we launched the Verna, we launched the Neos, we launched the Aura. Even Aura has grown in double digits in the H1. So Indian market is very big. I think there is a potential for all models, but definitely the preference is for the SUV. We have already invested 20,000 crores in Tamil Nadu, which would help us to localize and really bring in more and more EV products in the future. If you see globally, EVs need a support, and I think Indian government has been at the forefront of really supporting GST 5% and FAME scheme, really helping. With different states are giving different kind of preferences to EVs, whether it is in terms of registration charges or so many other things. So I think fairly we are on the right path, and I'm sure this will really help us to get more and more towards electrification. We believe that Indian market is really here to grow, and we have invested so much and will continue to invest. We have already made some very, very strong plans for India, and we believe very strongly that the connect that Indian people have with Hyundai is really, really getting stronger by the day. If you see Indian market
or a business honcho accused of manipulating the market.
अदानी जी 609 नंबर से दूसरे नंबर तक कैसे पहुंचे? सिर्फ एक सवाल पूछा.
Government streaming now.